Welcome back to the channel, everyone. Today I want to talk about how the shorts have recently either been A, closing their short positions, or B, transferring them to Melvin Capital, and how Melvin Capital are just about to go bankrupt and close all of their AMC shorts, causing the squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So I want to start by talking about the recent 13F filings and talk about the movements in the AMC positions for all of these large hedge funds. I then want to touch on the overall institutional holdings before recircling back to Melvin Capital and what they've been doing. So first on the list is IMC Chicago, who have increased their AMC call option position by an extra 800,000 calls. They've also decreased their put position by 84,000 puts. This is obviously a massive increase in AMC calls and a reduction in AMC puts. This story is basically the same for all of the large hedge funds. Again, looking at Cutler Group, they've increased their AMC calls by 230,000 calls and decreased their puts by around 200,000 puts. Their call position to put position is vastly weighted towards the calls. Now obviously this is the recent April filings for the Q1 movements for AMC when AMC was at an all-time low. And I think it's really comforting how all of these hedge funds have been massively increasing their call positions and reducing their put positions drastically, just showing that AMC is about to run. Now interestingly enough, we've also seen Pacer Advisors picking up 1.6 million convertible debt securities. I haven't really done too much research into these debt securities, so I think that's what I'm going to do for my next video. Initially, I don't like the sound of convertible debt securities because it just gives these hedges a way to create more shares, but there's only 1.6 million shares, which isn't too drastic. But so far we've seen a number of hedge funds increasing their AMC shareholdings, increasing their AMC calls, and decreasing their AMC puts. The overall AMC Institutional Holdings has now already increased from around 170 million shares all the way to over 190 million. And therefore this is just suggesting that institutions are continually purchasing more and more and more AMC shares, expecting AMC to run up again in the future. Now, as I said, we've seen a number of these hedge funds closing out or reducing their put positions and increasing their call positions, but we haven't seen too much of a dramatic movement on the AMC stock. And therefore, maybe they haven't necessarily been closing out of their put and their short positions. Maybe they've just been simply transferring those positions over to Melvin Capital. We know that Melvin Capital are the scapegoat and they are going to be the fall boy for the AMC squeeze, and therefore it makes sense for all of these large hedge funds to be transferring their put positions. I think Steve-O has an interesting reason as to why Melvin Capital has been performing so badly as of late and how they're basically taking on all the risk to save the other hedge funds. He says it's simple. Melvin shorts the daylights out of everything and everybody else closes out of their positions, so Melvin takes on all of the debt and takes on all of the losses. He said at the end of the day, why does Melvin Capital really care? Because either way, they're already going out of business. Melvin Capital have already announced the closure of their fund, and therefore it makes sense for Melvin Capital to take on all of the losses and to take the big hit so that other hedge funds don't end up going bankrupt. He says, I guess they know the GameStop dividend will be the death of them. So I guess we have a tentative date on the mother of all short squeezes, which is June. We know that GameStop are shortly issuing a dividend, and we already know that Melvin Capital are shortly going to be closing their fund. And it all seems to be pointing towards this June deadline. Now you may say, Tom, how are Melvin Capital taking on all of this risk? How are they taking on all of these short positions? And do Melvin Capital have enough money to pay out the apes? And I think it's because Melvin Capital have been very, very secretive and have been hiding the true size of their actual assets under management. All this time we thought that Melvin Capital had originally around $10 billion, which then shrank to 8 billion, shrank to 5 billion, and then they've had Citadel and Point72 withdraw further cash. So all in all, we thought that Melvin Capital had around $3 to $4 billion. But actually, Melvin Capital have just released their Q1 2022 brochure, and actually they're managing much more money. Guys, many of you may not have a lot of confidence in the stock market at the moment. There's all of this market manipulation and market fraud that seems to be going entirely unpunished. And that's why I personally also like to invest in crypto, especially now that Bitcoin is trending upwards. I personally like to use BlockFi, and right now you can currently get up to $250 in free Bitcoin when you sign up to BlockFi using the link in the description below and make your first deposit. BlockFi also has many other cryptocurrencies and not just Bitcoin to invest in, and that's why more than 500,000 people and 350 institutions globally use BlockFi to manage over $10 billion in assets. BlockFi as a platform is also entirely free to use and requires no minimum balance. BlockFi also offers a rewards credit card with an introductory rate of 3.5% cashback on your purchases, also paid in crypto, so you can continue to accumulate more and more. There's also no annual fees and no foreign transaction fee, and the card is currently available in the United States. So guys, be sure to sign up to BlockFi using the link in the description below to get up to $250 in free Bitcoin. We know that back in April 2021, Reuters were reporting that Melvin Capital Management was reporting to shrink their $8 billion fund, or $8.7 billion fund, to around $5 billion. Recently, Melvin Capital were planning to shut this fund and open a new fund and cap the second fund to only $5 billion as well. Obviously, we knew that Citadel and Point72 had withdrawn their money, so maybe they only had 3 to 4 billion, or somewhere between 3 and 5 billion. But in actual reality, as of December 31st, 2021, Melvin Capital had $21.8 billion of regulatory assets under management, managed on a discretionary basis. That breaks down to around $18.8 billion of pooled investment vehicles, other than investment companies and business development companies. And also around $2.9 billion of corporations or other businesses not listed above. Now that $2.9 billion is cash managed on behalf of third-party clients, and therefore, all in all, Melvin Capital has nearly $22 billion. Now that is obviously a lot more money than they were actually reporting, and a lot more money than we expected to pay out the AMC apes. And obviously, more importantly, on top of that, there's the DCC Insurance, which isn't really insurance, it's just the total pooled assets of all of the members of the DTCC. Obviously, when Melvin Capital defaults and they can't purchase the shares back on the open market because apes aren't selling it, the DTCC will need to get involved and will have to backstop the required cash. Obviously, for Melvin Capital to go bankrupt officially, Melvin Capital has to close out of all of their short positions. To close out of their AMC shorts, they have to buy back AMC shares. And obviously, for Melvin Capital to cover their short positions, they need to buy the shares back from us, the AMC retail investors, at whatever price we set. And this is why the DCCC will likely need to get involved, because Melvin Capital won't have enough cash on their own to cover all of the AMC shares that they need to repurchase. Now, they technically don't have to buy back every single share that every single ape holds. They only need to buy back enough shares to cover their AMC short position. Now, obviously, it's likely that apes hold the float many times over, and therefore they'll need enough cash to buy the entire float many times over, which is why the DTCC will likely need to be involved. Now, there's also been some very large social media personalities that are overjoyed that the Elon Musk purchase of Twitter has gone through. Tyler Winklevoss, one of the Winklevoss brothers, tweeted saying, "When Elon Musk owns Twitter, we will finally learn how sinister and politically motivated the shadow banning and algorithms were, and how dangerous they were to our democracy." Obviously, when Elon Musk purchases Twitter, he will have full access to all of the algorithms that Twitter uses. Therefore, he will be able to determine how Twitter shadow bans users. Elon Musk also plans to make the source code for all of these algorithms publicly available so that anyone can read through and figure out exactly how they work. But it's also been noted that Twitter recently locked its source code to potentially prevent current employees from damaging the source code. Twitter have also suspended and also locked down any future updates, again to prevent any sabotage or potentially to hide the truth. The current source code could be manipulated so that Elon Musk and the new owners can't see just how nefarious these algorithms and these shadow bannings really were. And Jack also tweeted just how overjoyed he is that the Elon Musk purchase has gone through. Yesterday, Jack tweeted a song by Radiohead called "Everything's in Its Rightful Place." He tweeted saying, "I love Twitter. Twitter is the closest thing we have to a global consciousness." He said, "The idea and service is all that matters to me, and I will do whatever it takes to protect both. Twitter as a company has always been my sole issue and my biggest regret." He said it has been owned by Wall Street and the ad model. Taking it back from Wall Street is the correct first step. Obviously, when Jack and the old management listed Twitter publicly, they had to sell off a portion of their holding and therefore could never truly buy back Twitter on their own. As time has gone by, Wall Street has owned a larger and larger chunk of Twitter and has had more and more and more influence. And ultimately that is why Jack left and stepped down from his position, because he knew that Wall Street was running Twitter. Obviously, Jack didn't have enough money on his own to rebuy Twitter, but now that Elon Musk has stepped in, retail investors once again hold Twitter. He said, "In principle, I don't believe anyone should own or run Twitter. It wants to be a public good at a protocol level, not a company." He said, "Solving for the problem of it being a company, however, Elon is the singular solution that I trust. I trust his mission to extend the light of consciousness." I think it's brilliant that Twitter will once again become a platform for free speech where users won't be censored or shadow banned with no reason. Guys, be sure to let me know down in the comments below what you think about these hedge funds closing or transferring their short positions to Melvin Capital. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.